All right. Week in review, May 5th. Major U.S. indexes posted solid gains last week, capping off a 9-day winning streak for the S&P 500. For the week, the S&P 500 rose 2.94%. The NASDAQ climbed 3.43%, and the Dow Jones advanced 3.02%. Crude oil prices, however, continued their decline, ending right around $58 a barrel, marking an 18% drop for the month, the largest monthly decline since November 2021. Now, April was a volatile month for equities in the S&P 500, falling as much as 12.6% from where the month began. The S&P 500 index approached a bear market after falling almost 20% from its February highs. Now, despite this turbulence, the index managed to recover most of the losses and ended April down just 0.7%. It was also a significant week for economic releases. So our preliminary first quarter gross domestic product, or GDP, showed a contraction of 0.3%, surprising economists and marking the first decline since quarter one of 2022. The drop was attributed to a surge in imports as companies rush to build up their inventories ahead of these anticipated tariff and how they will impact kind of international trade moving forward. On a more positive note, the labor market remained resilient. The unemployment rate held steady at 4.2%, and the job creation exceeded expectations. Now let's talk upcoming economic releases. This week brings several important economic updates. On Tuesday, tomorrow, May 6th, the trade balance report will offer insights into U.S. exports and imports. On Wednesday, all eyes, I repeat, all eyes will be on the Federal Reserve as it announces its latest interest rate, unemployment rate decision. Then, on Thursday, May 8th, the release of the wholesale inventory data will shed light on supply chain and business stockpiling trends. Let's shift gear a little bit and let's talk outlook. So far, around 3/4 of the S&P 500 companies have reported their first quarter results, and analysts lifted their overall expectation once again. As of February Q1, earnings were expected to rise an average of 12.8%. 2 weeks earlier, the projected earnings growth stood at around 7%. However, guidance for the second quarter earnings growth has weakened as companies are concerned around consumer spending and tariffs. The Federal Reserve is set to meet this week with a decision on interest rates that are expected on Wednesday. Markets widely anticipate the Fed will leave rates unchanged. Looking ahead, investors are now pricing in at least 3/4 point rate cuts by the end of the year. Is that going to happen? We don't know. So, stocks in the news. Meta, also known as Facebook, reported a stronger than expected earnings beat last week. The company also raised its 2025 capital expenditure guidance to a range of $64 billion all the way up to $72 billion. Billion with a B, with the bulk of the investment aimed at AI, or artificial intelligence infrastructure development. The stock gained 8.6% for the week, and the second major stock in the news is Apple, ticker AAPL, reported an earnings beat last week as well. While Apple plans to shift most US-based production to India and Vietnam to mitigate the impact of tariffs on the Chinese goods, it still anticipates an additional $900 million in additional costs for the upcoming quarter. The stock was down 2.28% for the week. That's your report. We'll see you next week.